Hello and good afternoon. Sorry. Hello and good morning to all the participants joining us today from the Africa, the Caribbeans, and the Europe region. Good afternoon to all joining us from the Asia region, and a very good evening to all those who have enthusiastically joined us today from the Pacific region. I see there are so many participants from Pacific joining us today. I'm Suchitra Ugre, the coordinator for the FAO-supported initiative, Global Network for Capacity Building, to increase access of small-scale fisheries to financial services, also called the CAFI-SSF network. I welcome all to the knowledge sharing webinar talk series, which we have been organizing since the year 2021. Today, we are delighted to co-organize the program in association with the United Nations Capital Development Fund and the Food and Agriculture Organization of the UN. The topic that we bring for today's discussion is a very interesting topic, and it's also an emerging trend in the fisheries sector. It's called parametric insurance for small-scale fisheries. So we have called upon organizations to share their experiences from the Caribbean, Pacific, and Asia region. These organizations have conducted countrywide studies on insurance gaps. They have also rolled out programs and designed and developed products for the fishers and fish farmers to support a resilient small-scale fisheries sector. So without taking much time, we have a very packed agenda today, and it's going to be a combination of presentations where we have for each presentation almost two people presenting together, one from the fisheries as well as the insurance side. And that's what this evolving class of insurance and this emerging topic is currently requiring the expertise of. So as you can see, I will walk you all through the agenda that is there. The outline of today's program is the COAST initiative. First discussion is going to happen is the first parametric cover in the world launched for the fisheries sector in the Caribbean region. Thereafter, we have a presentation from the Pacific Insurance Climate Adaptation Program Initiative, a product designed to protect fishers in the Pacific region. Then we have the APART project, which is a World Bank funded project, and they have developed India's first parametric cover for fishery farmer producer companies in the northeastern state of Assam. Then we will be sharing we have a speaker from the private insurance sector, from the Howden Insurance. Then we have a very interesting method that is going to be discussed. And this came as a surprise entry to us since we connected with them very recently, just 4-5 days back. And they have been gracious enough to join us today in such a short notice. And finally, followed by FAO's perspective on comprehensive or complementary risk cover for the small-scale fisheries, followed by the closing remarks. So with this, I would like to invite our first speaker for today's discussion. And I would like to introduce you all to the course to Ms. Elizabeth Emmanuel, who's the Sustainability Manager of the Caribbean Catastrophic Risk Insurance Facility, that's the CCRIF. Elizabeth leads the Technical Assistance and Corporate Communication team of CCRIF and continues to work with them for the rollout of COAST to other countries in the Caribbean region. For your information, COAST is the Caribbean Oceans and Aquaculture Sustainability Facility. And this presentation is going to be done along with Elizabeth Emmanuel. We have Gina Sanguinetti Phillips also, who will be joining us. So over to you, Elizabeth and Gina.
Hi, good morning, good afternoon, good evening, good night. So if you would allow me to share my screen.
Yeah.
So we're gonna deliver a pretty short presentation on the CRIF Parametric product for the fishery sector. In fact, we're gonna a presentation on cost, but we'll also touch very slightly on a microinsurance product that we are also going to be launching this month, which is called the livelihood protection policy. So the coast insurance product is actually a sovereign product. It's a product purchased by governments, but it has what we like to refer to as microinsurance features, because within this product, it gets down to the level of government. Sorry, to the level of the fisher folk. The payouts will get to the fisher folk. So just first to give you a very short synopsis of CRIF. CRIF is the Caribbean and Central America's development insurance company. We were prompted, or the establishment of CRIF was as the result of a tropical cyclone or a hurricane called Hurricane Ivan way back in 2004, when several countries in the Caribbean, about 9 countries in the Caribbean, were impacted around the same time by that hurricane, causing damages as high as 200% of countries' GDP. That led Caribbean governments to begin to think of what sort of facility could they put in place to financially protect their economy and to support their populations following a natural disaster before, having this quick liquidity before access or before, access to loans and grants, etc. And this led to the establishment of CRIF as a risk pool designed for Caribbean governments to limit the financial impact of hurricanes and earthquakes. And that was in 2007. Since 2007, CRIF has gained many members. So we now have a total of 26 members, 19 governments in the Caribbean, 4 in Central America, and 3 electric utility companies, because our products, there has been a range of products that have been introduced into the region to support focusing on different perils, but also we have begun to utilize our base products for tropical cyclone and excess rainfall to develop products that specifically target different sectors. So as it is parametric insurance, and we do offer products not readily available in traditional insurance markets. So like all CRIF products, including the coast product that is designed for the fishery sector, it allows governments to pre-finance their short-term liquidity before a disaster actually happens. So it's an ex-ante financing instrument and designed to provide quick liquidity following a natural disaster. It is parametric insurance. It's quite different from indemnity insurance because parametric insurance products make payments based on the intensity of an event and the loss calculated in a pre-agreed model that is caused by these events, which actually results in the ability to make payouts very quickly after a hazard event, reducing that space. You don't need, for example, to have assessments on the ground after the natural disaster. In terms of CRIF generally, we have made payouts totaling 268 million to 764 payouts since 2007 to 17 of our member governments, totaling 268 million. And what we note about parametric insurance and these payouts is that payouts under parametric insurance, many of which are used to fund immediate post-event activities. And in the case of CRIF, this is about 62% of post-event activities. And what that really means is that these payouts can go to clearing roads or dealing with infrastructure immediately following a natural disaster that have been damaged, but it can also go to the vulnerable within our population. And we have many examples of payouts going directly to support vulnerable communities, to purchase food, water, shelter, amongst others. Now, we have two products for vulnerable populations. One is POST, where the payouts, the entire product is designed to support the fishery sector and to support fisherfolk following a natural disaster. So we have the POST product, as well as what we refer to as the livelihood protection policy, which is under a project called CRAIG, Caribbean Risk Adaptation and Insurance in the Caribbean Project, which we're implementing in collaboration with the Munich Climate Insurance Initiative, as well as the ILO Impact Insurance and a local insurance company or a regional insurance company in the Caribbean called Guardian General Insurance Limited. So POST, like all CRIPS products, it does provide quick payouts designed to support the livelihood of fishers and others in the fisheries industry. And this is an important point, because the fisheries value chain is quite large. In that it's not just fisherfolk, it's not just boat owners, but in the Caribbean, a very large percentage of fisherfolk are actually women who work in the sector, in the fish markets, in the fish cooperatives. You also have more vulnerable groups than the fishermen themselves, such as what we refer to as boat boys, which would be persons that actually clean, for example, like clean the fish markets or clean the fish or gut the fish, etc. So you do also have persons who add value to the fish by, you have, for example, a lot of fish festivals, etc., or persons who become not just vendors of selling fish, but also cooking that fish and selling fish to the populations. So what it does is that it provides a payout to governments if a policy is triggered, and then there is a mechanism attached to the national policy or to the sovereign policy that allows for the identification of beneficiaries. So unlike your regular parametric insurance product for governments, beneficiaries have to be determined prior to the product being purchased. And even after the product is purchased, you can continue to add beneficiaries. And where do those beneficiaries come from? Yes, they're the fisherfolk, but they are registered fisherfolk, for example. And also they may be persons that are captured under the government's national insurance schemes, right? And this is where, for example, they're able to capture many of the women who are employed to the sector. So COAST was designed as the first ever climate risk parametric.
Elizabeth, sorry to interrupt. You have four to 5 minutes left. So if you can just focus on more prominent points of each of the slides, please.
All right. So
I guess Tina is also. Yeah. Go ahead.
It covers bad weather events such as rainfall and tropical cyclone. It tracks payouts at the scale of the individual beneficiaries, and it encourages inclusiveness and participation of women, as well as the rapid transfer to fisherfolk. So I'll ask Gina to take us from this point to the next 4 minutes. Go ahead, Alexander.
Thanks, Liz.
Share.
So the COAST parametric insurance product has two components, and it can be triggered if either of these conditions is met. So an adverse weather component, if there are high waves or high rainfall, and that would act kind of like business interruption insurance for the fisherfolk if they're prevented from going out to sea. And another component, the tropical cyclone component, which is triggered based on the intensity or the strength of winds and storm surge, which might impact the fisheries infrastructure. Next slide, please. And so these are the two components, and well, this just reiterates what I said before. So if you could just go to the next one, Liz, and we'll probably end there. And so the CRIF model is like all other CRIF models. For the coast model is like all of the CRIF models, and it's made of these modules, the hazard, exposure, and vulnerability modules, which then calculate a modeled loss due to a particular weather event to determine if a country's coast policy is triggered. And so the exposure, which is basically the assets at risk, these are the exposure or the assets related to the fisheries infrastructure. And it records the, yes, so go ahead. Go ahead, Liz. And so these are an example of some of the infrastructure. So your ports and landing sites and your fishing beaches. And for the fisher folk now, for the adverse weather component, it's based on the historical value of daily catch to estimate the business interruption aspect of the coast product. So those are the main aspects of the product. And as Elizabeth mentioned, a key point is that if the coast policy is triggered and the government receives a payout, it's automatically disseminated to all the persons in the list of beneficiaries for the fisheries industry in that country. So the slide deck has a lot of other information about the model, and we'll make that available. You can look at your leisure. But the key point is that it acts kind of like microinsurance in that the beneficiaries automatically receive payouts. So Liz will just conclude with one final point on the livelihood protection policy she mentioned.
Just very quickly, the livelihood protection policy is designed for vulnerable groups, and we're also linking it to social protection policy and strategy to allow governments to be also able to purchase this particular product to support more shock responsive social protection. It is a product designed not just for fisher folk, but for farmers, day laborers, market vendors, food vendors, small businesses that may be impacted by high rainfall and high winds. And again, like all other parametric insurance products designed to provide quick cash payouts following extreme weather events. So, and when you get our presentation, you also have the link to a video. So that's it for us.
Thank you. Thank you, Elizabeth and Gina, for walking us through such a rich content presentation. I know there's a lot more information that you have, but this today is more of our attempt to bring all the various initiatives under the parametric insurance that are existing across various regions to see where we are in terms of the fisheries sector and what are the services that are being offered across various regions. So as and when we get more opportunities, we would be going deeper into region-wise discussions later on in our knowledge sharing sessions. So thank you once again to both of you for joining us so very late in the night, and we cannot be more grateful to both of you to find time at this hour. So with this, we would like to move to the next presentation, our next speaker. We have our next speaker for today is okay. So we have Mr. Krishnan Narasimhan, who's a program manager for the Pacific Insurance Climate Adaptation Program, and he's also the lead specialist for the Climate Disaster Risk Financing and Insurance of the UNCDF. Mr. Krishnan has been associated with the UNCDF since 2013, and he has been instrumental in developing the CDFRI portfolio within the UNCDF to the various flagship PCAP program. And he has pioneered the introduction of the region's first ever market-based parametric microinsurance in the 7 Pacific states. Mr. Krishnan has a master's degree in human resource management. So, Mr. Krishnan, over to you to share the PCAP initiative.
Yeah, thank you very much, Suchitra, and thanks to the CAFI-SSF network for this opportunity to present. I would request you to help me navigate the presentation, and for the benefit of the viewers and listeners and the audience, so UNCDF leads this joint program in the Pacific called the Pacific Insurance and Climate Adaptation Program. It's jointly administered by UNCDF, the United Nations University Institute for Environment and Human Security based in Bonn, and the UN Development Program. And from the foundations of this program, we are also expanding to select countries in Africa and Asia. Next, please. So the biggest development challenge in the Pacific is its high vulnerability, and you take various risk indices, you will find 6 or 7 like Pacific Islands in the top 15 or top 10. And you have different exposures to various perils, tropical cyclones in some parts of the Pacific, excess rainfall in a few other countries, droughts, and you also have geohazards like earthquakes and tsunamis, and not to mention other hazards like landslides, etc. So this causes extensive economic damages, especially to the climate vulnerable populations. And as it is, these countries have severe fiscal strains, and they have very narrow economic base, and therefore it's extremely difficult for them to financially cope in the aftermath of major disaster. Next. As I said earlier, there are very limited technical capacities and financial capacities, very limited ex-ante financial instruments. Few countries have reserve funds and contingency funds, and others either repurpose their budget or borrow externally, or just defer investments. And the ex-post financial instruments is what is commonly used. Next. So I will just give you an example of some of the financial coping mechanisms that we found out during a recent study following several cyclones in Fiji. And you'll find that insurance comes very low in the order of priority of what people do. There is negative coping mechanisms, they use up their savings, or they resort to selling their assets. Next. So this program is about 3 years old, and we have implementation going on in 5 Pacific countries: Fiji, Tonga, Vanuatu, Samoa, and Papua New Guinea. And 2024 will see us doing implementation in 2 more countries. The solutions that we are trying to put out there is an immediate ex-ante financial response that provides local communities immediate cash liquidity in the aftermath of a disaster. And it is to build capacities in the local markets to sustainably offer these solutions. The target sectors are, of course, fisheries, agriculture, MSMEs, and tourism, with the cross-cutting focus on women, persons with disability, and social welfare beneficiaries. Next. So UNCDF has what's called the market ecosystem approach. And what do we really mean by that? So we identify the local ecosystem players. It could be insurance companies, it could be reinsurers, it could be mobile network operators, it could be other financial service providers, microfinance institutions. And we not only provide them technical assistance, but UNCDF has a mandate that can offer blended financing instruments, which include cost-sharing grants, guarantees, and loans that unlock the potential of local insurers. And we're not talking about major big insurers of the world. We're talking about local insurance companies that have maybe operations in one country or two countries at the most. Of course, this is backed by a lot of evidence and research into co-creation of the solutions, and also intense literacy programs aimed at building the capacity of our partners. Next. So this particular slide may look a little complicated. So this is the type of a local market ecosystem that is developed in each country. So it has sort of risk modelers on one side. It has insurers and reinsurers on the other side. It has government, central banks on one side. Then it has fintech and insurtech partners. It has got distribution partners, and it's got local underwriters. So all these market players or ecosystem actors are brought together to deliver successful solutions using a whole of ecosystem approach. So in one country, typically there could be 15 to 20 players that we put together in various partnerships to deliver these solutions at the last mile, using sort of digital onboarding tools and digital payment mechanisms using mobile networks. Thanks. Next. So I will run through some specific products that have been put out in various countries over the next 3 slides. Of course, this presentation is going to be made available, and we are happy to offer some more insights in separate calls. Next. So in Fiji, we have a combined wind and rainfall coverage. We also have a standalone rainfall coverage. These are, insurances ranging from $1,000 to $5,000, and these are triggered either by a tropical cyclone or by an excess rainfall event. In Tonga, the product is so far cyclonic wind, and we will shortly be having a rainfall product added in this coming season. Next. So Vanuatu, again, it's a cyclonic wind cover. Samoa is also cyclonic wind cover, but there's a demand for a rainfall product and also a drought product. So that should be developed and put out by October, which is the start of the next season. Next. So PNG is an interesting case. So Papua New Guinea has 22 different provinces, and each province is faced with different perils. So the product that has been developed for PNG is a multi-peril product, which has earthquake, cyclone, rainfall, and drought combined in one product. So any one trigger can result into a payout. Next, please. So there's an earthquake cover, there's a drought cover, there's an excess rainfall cover, and a cyclonic wind cover. Next. All packaged in one. So there is another very interesting concept that we have developed and piloted just now. So we are talking about parametric insurance, which pays out after an event happens. So there's a lot of discussion on anticipatory action. And there's evidence to show that $1 invested in anticipatory action saves up to $6 or $7 after an extreme event. So we said, why don't we develop an insurance product for this? So along with the UNDRR, we have developed a product that will pay for a tropical cyclone 48 to 72 hours before the landfall of that event. So up to 20% of the insured amount can be paid directly to the community 48 to 72 hours prior. So this product has been piloted in 4 communities, which are shown there. And if there were an extreme cyclone event, either category 3 or category 4 or category 5, 10, 15 or 20% of the sum insured will be paid out 3 days prior to the event. Next. Yeah, the beauty about this product is that even if the cyclone deviates from the path, the anticipatory payment made need not be refunded. Next. Yes, some of the high level results are in the last 2-3 years in the 3 countries where like pilots are over and scaling is happening. Close to 18,000 households, which roughly represent about 95,000 beneficiaries, have been covered by one or more of these insurance products. 40% of them are women, and 6% of them are persons with disabilities. And through our various outreach programs, over 34,000 people have been trained. So approximately 15% of the people covered are in the fisheries sector, and following the excess rainfall events and the like tropical cyclones last year in Fiji and Vanuatu, 1,097 claims were paid. And just last month, following excess rainfall, 337 claims have been made directly. These are all done within 2 weeks of the event, directly into the mobile wallet or bank account, and there is no other sort of claim verification process. So the total number of recipients, 38% are women, 19% of them are persons with disabilities. Next. Yeah, these are some of the possible plans for protecting fishers, which we are considering. One is looking at household level sort of resilience building, not only through disaster sort of risk financing like parametric insurance, but looking at a wholesome sort of DRM package at the household level. Of course, this is backed by a lot of awareness campaigns which are done by our partners. Then there is a demand for introducing this sort of parametric insurance for observers on fishing vessels that are going in these marine protected areas. So that's again something which we're working on in 2 countries. And then all this is linked to the 2050 Blue Pacific strategy, because while we call them small island developing states in the Pacific, these are actually large ocean states because they have huge expanses, and sort of fisheries is one of the biggest and yet untapped sort of market segments. Next. Yeah, these are some of the challenges and opportunities. The coastal fishers are not so well organized, and there is still a lack of awareness and access to these insurance products among smallholders. And then a lot of literacy and sort of training programs have to be done for them to be aware about these products and then access these products. What we are now doing is working with the development banks and national provident funds, which are superannuation funds, for group aggregation. In many of these countries, the available fisheries cooperatives have been engaged. A lot of advocacy is also done through the Ministry of Fisheries, and there is a potential FAO and UNCDF collaboration, which I look forward to, and co-creation of solutions following deep dive and evidence-based studies. I think my presentation ends here. Thank you very much for this opportunity. My coordinates are given, so if you need to engage further, I'm happy to do that. Thank you very much.
Thank you. Thank you, Mr. Krishnan, for giving us such a concise and informative presentation. And thank you also for being mindful of the time. I know there was much more information there, but considering the time, you have made it so concise. I'm sure there are going to be many questions towards the end for this initiative. So with this, we would like to move to the next presenter. I would like to introduce Dr. Sanjay Sarma. He's a senior fishery officer from the Department of Fisheries, Government of Assam, India. Dr. Sarma has been associated for the last decade as a state fisheries coordinator for the inland fisheries development in the state of Assam under with the World Bank funded project called the Assam Agriculture Competitiveness Project and the Assam Agribusiness and Rural Transformation Project. Under his guidance, a total of 20 fish farmer producer companies are functional mainly for production of quality seeds and fish feed. Dr. Sarma holds a master's in fisheries resource management from the Central Institute of Fisheries Education, Mumbai. And he also has a doctoral degree in fisheries from the Guwahati University of Assam in India. So, Dr. Sarma, over to you for sharing India's first parametric cover for the fish farmer producer companies in the northeastern state of Assam. Yeah, I also want to share this presentation will be done along with Dr. Sarma. Tanail Lohia is joining us to do the presentation.
Yeah.
So over to you both.
Yeah. Thank you, ma'am. Welcome to you for giving me this opportunity for highlighting this fisheries development, mainly this northeast region. Next slide, please. Because as you rightly mentioned, then I am being associated on the state of this Assam, mainly this inland fisheries, mainly this inland fisheries. And then the total water resource of this state is around 3.5 million hectare. Next slide, please. Because mainly it is a water resource, and then it is very fortunate that this state, suppose if you consider this requirement of this fish at the rate of this 11 kg per individual per annum, then we are suppose almost self-dependent on this fisheries, because this World Bank funded project for last 15 years been supporting us for this development of this fisheries as well as this agriculture sector. And then suppose 2.5 million people are being associated in Assam for this fisheries sector. Next, please. Then suppose this area society, it is a government society, which is this main project from coordination unit, is World Bank funded project mainly for this last 15 years. Then initially it was in Assam Agricultural Competitiveness Project, and now it is in this, it is called this efforts Assam well development for agricultural development mainly. It is a project, World Bank funded project. Then now we are going to this completion of this project. And then very recently, I would like to mention, next slide please. Then I would like to mention some the association of this area society for this World Bank funded project for 1995. It was commenced, and then until today, these efforts, these projects are being going on for the World Bank funded project. That's why last 30 years we are being associated with this World Bank funded project with this satisfactory rating from this World Bank. Next, please. Then if we see this sustainability for this production of this water bodies, mainly the small ponds, individual ponds, and then tanks, and as well as these bill fisheries, low-lying areas. Then suppose our production is being enhanced, and this sustainability after completion of this project, also the farmers are doing suppose the same production level after completion of this project. It is a very good sign. Next, please. And then suppose this for this agriculture marketing or like that, we are going for this agri processing, cold chain development, and urban center, as well as this market linkage with this industry and this road infrastructure also. This extension system creates well informed and tangible of these farmers. And then now these were these main aims and objectives of this effort. And then it is, I came to say that this aim of this project has already been achieved, and then people are also been very happy, and near about this 5 lakh farmers are being associated with this effort project, mainly this agriculture as well as this fisheries sector also. Next, please. Then farmers producers company, as you have already been mentioned, this farmers producers company, because if it is not been registered in a legal entity or like that, then farmers cannot bargain their products or like that. That's initially the problem was that because they are not getting this actual price of their production. But we have already been registered 25 numbers of farmers producers company in fisheries under this effort. And now Mainly they are being associated with quality fish production because this was the main constant in Assam. Fish and then production of fish feed also by using this local ingredients. That is also this important. And then so this FPCs, Farmer Services Company, with seed quality seeds as well as this quality fish feed productions have been going on. And then that's why we have been going with self-dependent on this fish production. Next, please. Yeah, these are the some photographic that we are because our FPCs are being associated with quality feed production. Next, please. Yeah, these are these suppose some good example because our these women are also been associated. And most of these women are also been associated for this business activities. That is a very good sense because our project motto was that we should have to involve with 30% of this local women here and then rural women. And then I am happy to say that not 30%, more than 45% women are being associated in the species sector in Assam under this project. Next, please.
Dr. Sarma,
Yeah.
sorry to interrupt. Can we keep going further
Yeah, yeah.
as
Okay.
these are more about information about the various FFPOs, right?
Next,
And
next,
can we?
yeah. Next, please. Yeah. Next, please. These are some component of this predictive farming or like that. Next, please. Next, please. Yeah. Then most of our these women are being associated or this small fish production also because these small water bodies, every household is having small ponds and then they are being associated this small fish production and these small fish are being next list being blending and they are by using this local ingredients or like that and these are being also being used for to combat this malnutrition for the children. This is the good impact these fisheries because these small fish are being produced in their own fish pond, small fish, and then women are being associated also this fish small fish powder. Next please. And these are these photographs that small in association with this education department, ICDS centers or like that. Regularly we are feeding along with this suppose normal diet, this fish powder also, because our main aim is that how to combat this malnutrition of the children or like that. But next please. Yeah. Then parametric insurance because thing is that main why you are going for this parametric insurance under this project because in Assam and Northeast region mainly because we have seen that a lot of suppose and natural calamities mainly this floods as well as drought like situation and then suppose sometimes this winter also it has been affected to our farmers mainly the farmers are very poor. And if they are being associated or facing such type of this problem or like that, then how it can be this overcome? And then suppose a lot of national insurance companies are being there in Northeast or India, but frankly speaking, they are not coming forward to help this. Suppose this our farmers or like that and coverage. Suppose the amount of insurance amount was also very high. That's why we requested this our one of our companies, this Provenance company, it is DGSF, which is under this project, they are doing very excellent job. And then last 2 months back, they have been started, initiated this parametric insurance and this fisheries in the Northeast region. And then my colleague, Mr. Tana, is being there. And then I would like to request to explain by Mr. Tana. He is the marketing executive and senior marketing officer of this Absolute and DGSF company. Mr. Tanay, please explain from the next slide, please.
Yeah, thank you, Sanjay sir, for the great introduction. So I represent Absolute and DigiSafe, and we were awarded a grant to build innovative financial solutions for the aquaculture sector in Assam. Now, while initially we focused just on insurance, once we deep dive into the ecosystem, we realized that to build the financial resilience of the farmers, insurance is just the first step, right? Once we start with insurance, farmers also don't have access to institutional credit. So getting access to institutional credit again boils down to them having an insurance product in this ecosystem or not. And even if they have access to finance, them effectively mitigating the risks which go away from just insurance, and them also predicting what kind of risks they foresee and then effectively preparing from those risks also becomes the key. So we are working across these three dimensions, making parametric insurance products available for these farmers, then building risk assessment products to enable access to more lending, institutional credit for these farmers, and then actually making farmers aware of the risks that they face so that they can protect themselves over and above the insurance solutions that are available to them, right? For the scope of this presentation, we'll be focusing just on insurance. Let's move to the next slide, please. So yeah, I think parametric insurance is like known to audience here, but what striking difference our product has as compared to the products presented here is that this product is exclusively for retail fishery farmers. Like there's no government intervention here, and farmers see this product and they pay for it, right? So the main differentiating factor that comes in is the ticket size of the product. So what we realized was a different risk is faced by fisheries at different point of the fishery life cycle. Say, for example, in winter months, they face problems due to low temperature, right? And so that's a product that we built in the month of December, January. Then in the coming Kharif season, they'll be facing risks of, say, drought, high temperature, flood, right? So we'll be breaking down these products into specific perils and then creating this on a very granular pin code level product for these farmers, so that the premium size is also very low. Like the lowest product that we have sold is less than $0.5, right? And because our mode of selling this is completely digital, it makes sense for us to go ahead and sell these products to farmers. If we look at the next slide again. Yeah. So right now, the products that we have built was disease protection, where basically we protected farmers from diseases that happen due to low temperature. Then we covered drying of pond, which happened during this time, like May, June, April, May, and June specifically. So we have already sold this policy to farmers where some rain-fed fisheries dry up due to not receiving enough rains, right? And they put the seeds in the pond already, so they suffer damages because there's not enough rains. So there's a cover for that we recently built. And we also have launched excess rainfall based cover, where due to flash like excess rainfalls in just 1 or 2 days, and overflowing of the pond occurs, where fishes move out of the pond. But then over the next 6 months, what we realized is, because right now the products that we are offering have a comparatively high basis risk as compared to indemnity products, right? Because say for temperature, the product is based on the ambient temperature and not the fishery temperature as such. So we are building our own data set to build products based on the actual parameters in the pond, right? Say pond temperature, the dissolved oxygen level in the pond, right? So we are doing ground truthing and remote sensing based models to build these kind of products. Then we are also exploring other data sources using our own in-house data sources and other satellite, more granular data sources to make the products more effective on the ground. And we are also launching a flood cover shortly, which will protect, this is in partnership with a reinsurance company. And we'll be covering fishery, crops, and properties as well, right? Basically, anybody in Assam can purchase this flood cover to protect against any loss they foresee from flood. Let's move to the next slide. Yeah. So when we look at building a product across in the aquaculture ecosystem, we brought ahead innovations across the entire value chain. Right from product design and development, we used our in-house underwriting team to co-create multiple products and then got them approved from multiple insurers in one go, so that farmers have access to more multiple insurance companies while for the same product, right? Because some farmers are more comfortable with, say, ICICI or say HDFC, basically any private insurance company in India. So, and then for product training and awareness, we empowered rural entrepreneurs through our completely mobile app, where the app is completely digital and any POS can onboard a farmer without any physical document collection whatsoever, right? Then product distribution again is completely digital. More than 2,000 policies have been sold, and the lowest policy sold was for just INR 40, which translates to $0.5. So this explains how streamlined the distribution process is. Then, because the entire process is digital and we are using digital public infrastructure in India, such as Aadhaar based verification and bank account verification, no QC of the documents is required separately. The entire policy is issued right when the premium is paid. So right now we have launched 3 products in the region and have covered 2,000 plus farmers. Over the next 6 months in the Kharif season, the plan is to launch 5 more products, which would cover even granular data sets and flood and other perils, and will cover more than 15,000 farmers over the next 6 months. So that's the plan. And along with insurance, we'll also be building a credit score, basically enable banks to lend to these farmers better, and also offer advisory to farmers to protect against these calamities. So just to add on, we also have built a flood alert system where any farmer who has been enrolled in our platform will get a complimentary access to a flood alert system, where this is tied to a publicly available data set based out of India, but any farmer will get a predictive flood alert 1 week in advance, right? So that they can better prepare over and above the insurance payout that they're going to receive. Yeah, so that's it from our end. Open to any questions that anybody might have.
Thank you. Thank you, Dr. Sarma, and thank you, Tanay, for taking us through such a excellent initiative. I've been aware about the APART project and the Area Society for many years, and it is really heartening to see how the society is catering to the needs of the particularly small-scale aquaculture producers, that too in the northeastern states for the past so many years. So I'm sure, yeah. So with this, we will move to the next presentation. We have our next speaker is Mr. Adarsh Krishnan. Mr. Adarsh Krishnan is a broker at Howden Insurance, and he works with the Department for the Climate Risks and Resilience. Adarsh has developed and places parametric risks for the team, spanning natural catastrophes, weather, and other data-driven alternative risks and transfer solutions. He has experience in structuring policies for agriculture, energy, financial institutions, construction, real estate, and supply chains. Adarsh holds a degree in mathematics, and he's a postgraduate in biodiversity and conservation. So Adarsh, over to you to share your perspective from the private insurance industry.
Thanks, Sujitra. I'm just going to share my screen, if that's okay, and I'll bring up my my slides. Is that visible?
Yes.
Great. So I think my esteemed fellow speakers have already potentially gone through some of this, but maybe just to get the general lay of the land, or the ocean in this case. Our major kind of focus points in parametric insurance are looking at potential material damage and non-damage business interruption. And I think this is the unique a unique point with parametric insurance compared to traditional insurance, because traditional insurance is potentially very good at covering material damage. But when we look at risks that might occur outside of the general property or the general area, they can still result in revenue or cost fluctuations as a result, right? And we'll go through a few examples shortly. And I think the beauty of parametric insurance and the application for fisheries is that first and foremost, a parametric structure is a blank slate, which means that we can customize policies based on the exposure in an area, or the appetite, or sorry, risk appetite of the farmers or communities themselves. And with that in mind, we can set different triggers in the index. So for example, with a cyclone, some communities might want a cyclone parametric cover paying out for category 2, whereas others might want something paying out for category 3. Or they might want different percentages for, you know, either one of those bounds. And importantly, for fisheries themselves, some climate factors can be challenging to price on a traditional indemnity basis. But given that parametric insurance looks at the probability of an event happening, we can apply some of these mathematical theories to actually transfer these different weather and climate risks for fisheries. And it's important to understand that the parametric insurance world operates in a similar fashion to the traditional insurance world, but in essence, it's able to offer alternative sources of capacity. So what this means is, firstly, it's not to say it'll completely replace traditional insurance, but it can transfer some risks the traditional insurance market can't. But it can also sit either under, side by side, or above traditional insurance. So what this means is it can be used as a additional tool and not just an alternative tool. And as many of our speakers have mentioned, it's a highly liquid market. So that means that claims can be paid relatively quickly. And sometimes that's 48 hours after a data point registers. So when it comes to resilience, sometimes it's not just the damage that occurs, but it's also the speed in which you can get back on your feet. And that's where parametric insurance can effectively step in. Apologies if this is too much like a lecture. Don't hold it against me. I used to be a maths teacher, but maybe just to go over a couple of examples. As you'll see on the left, we have something called a cat in the circle cyclone policy. And the idea here is we'd firstly like to protect a group of small scale fisheries by the coast and maybe a little bit further in the ocean. But it's also important to keep in mind that there's communities sitting on this land near the ocean that are tied to that microeconomy. So the sample policy here has been structured to pay out when a cyclone hits category 3 and up. And if it tracks in this circle, that's when the payouts are issued. And the payouts are structured with the aim of mirroring the expected losses. So the example that we're showing here is not only that we can get paid out if the fisheries are hit by a cyclone, but if it happens to avoid those fisheries. Are you guys able to see my cursor by any chance?
Yes.
So let's say this is where we have our fisheries. If the cyclone happens to track through this way, the wind speeds on the fisheries themselves may not be high enough to cause material damage, but the communities that are practicing their fisheries along this coastline might be impacted. So there's a material damage angle for the communities themselves. Now, if a cyclone happens to track through even further inland, and communities aren't impacted directly, or fisheries aren't impacted directly, there still could be a non-damage business interruption angle to consider, where if the internal supply chain, let's call it, right, where access to roads is blocked, access to the beach is blocked, those types of events can also cause losses. So this has been structured to show this very widespread cover. But if we wanted to structure something that just covered the fisheries, we would cover a smaller area, which inherently would also bring down the cost of our insurance. And this is another concept policy that we've been working on at Howden, which is looking at paying out for rainfall on these fisheries themselves. And the idea here is that the amount of rainfall could alter the pH levels of the tanks, right? And the payouts have been structured to reflect these potential losses as the pH level it increases or decreases, depending on what metrics have been set in the tanks. Now, the important thing to consider here again is that these policies are extremely customizable. So this impact of rainfall on these fisheries could differ based on the areas that you're in, based on the time of year, or based on the types of fish. So it's very important to keep in mind that this is not a policy that's set in stone, but rather a concept that we can develop further. And this can be taken many steps further, where we can also potentially look at temperature, for example. And that could mean, firstly, temperature affecting the fish, or it could also mean temperature affecting operational costs, where if it's potentially energy intensive fish farming practices, then sometimes the temperature in those tanks is controlled. But as the ambient temperature outside changes, you could have other shifts in your electricity costs. And coming back to either one of these policies, this is not to say that the farmers themselves need to hold the bulk of paying this premium. With parametric insurance, a policy can be taken out at different stages of the supply chain. So if we moved up a link in the supply chain and looked at potentially the buyers of this fish, they could also potentially take out a part of this parametric policy, where you're now looking at ensuring the supply chain itself, because there's financial interest held by different stages of the supply chain. So this is another unique factor with parametric insurance that's not actually doable that easily in the traditional market. I will stop there. I potentially maybe fielding some questions. I saw the agenda had an FAQ session. So I'll maybe pass it back to you, Suchitra. And it goes without saying that we are happy to work with different types of clients on different types of risks. So please don't hesitate to get in touch. If you feel that a risk is too unique, we're more than happy to take a look at it and see if we can come up with a very bespoke solution. Thank you.
Thank you. Thank you, Adarsh, for giving such an excellent presentation and also sharing that you all will be happy to work with various clients. This is certainly an emerging topic, and I'm sure there are several organizations that would be interested. So with this, we would like to move to the next presentation. I would like to invite Dr. Matteo Scarponi. Dr. Scarponi is the Principal Consulting Engineer of the Wolfson Unit for the Marine Technology and Industrial Aerodynamics at the University of Southampton. Dr. Matthew's expertise encompasses powerboat testing, commercial software development, and vessel stability, with a focus on small-scale fishing vessels. He has supported the UK Marine Accident Investigation Branch on various fishing vessel accident investigations. And since 2008, he has been responsible for Wolfson's hydrostatistics and stability software, HST. For the last 3 years, he has advised the UK Maritime and Coast Guard Agency and various fishing industry stakeholders on the stability provisions of the new code of conduct, new code of practice for under 15 meters of fishing vessels. So Dr. Matteo Scarponi, over to you to share the interesting Wolfson method, which is a weather-based approach to stability.
Thanks very much for having me, Suchitra. Can you hear me okay?
Yes.
Excellent. Great to be here. I'm Matteo. I'm a consulting engineer, and I'll give you an engineer's perspective on what's been discussed so far. And in particular, I'll describe and give you some examples about the Wolfson method, which is a weather-based approach to vessel stability. Next slide, please. The method is based on 3 research projects for the UK Maritime and Coast Guard Agency in 2004-2006. The key project is number 509, when more than 800 capsize tests were conducted in a large wave tank on scale vessels. The Wolfson method can predict the risk of a vessel capsizing in relation to the fishing operations and the sea state. For boats without stability data, it consists of a 1-page stability notice for the fisherman and a freeboard mark for the vessel. Over the last 10 years, the method has been validated with vessel accident data worldwide and by further model scale tests in the Southampton wave tank. Since 2021, the Wolfson method has been embedded in the UK code of practice for under 15-meter fishing boats. So all the small-scale fishers in the UK have to do it. So first I will present the weather-based parameter itself. Thank you. Then a practical example of the Wolfson notice. We've been discussing rainfall, temperature, humidity, wind speed. Let me introduce a slightly new parameter for some, which is significant wave height, or HS. HS is the average of the highest third of the waves observed. It's very common in ocean science and marine science. HS describes a real sea state where waves may vary in height from one to the next. The International Douglas scale for sea state is based on HS. For example, sea state 5, or rough, corresponds to a significant wave height of 2.5 to 4 meters. HS can be predicted by weather models and measured by wave buoys, so it can be as granular as you want it to be. Also, interestingly, it is the wave height that's likely to be estimated by a trained observer at sea, for example, a seafarer or a fisher. So how can we relate significant wave height to the risk of capsizing? Next slide, please. On the left-hand side, you can see the Wolfson stability notice for an example 11-meter vessel. The stability notice calculator is freely available to all. You just type the length and the width or beam of your vessel, and the calculator will predict its safe operating limits in relation to the sea state. It's a simple traffic light system. So if you were small-scale fishers, how would you use it? Well, you can use it for a live risk assessment throughout the fishing trip. At any one time, as a fisher, you can estimate the freeboard, which is the minimum distance between the deck and the water. Then you can read off the maximum recommended sea state for safe operation. Now, you can't control the sea state, but you can control the freeboard by adjusting, for example, your loading and your lifting. So, for example, if you have a great catch on a very lucky day, you may choose to take it home on a calm day, or alternatively, return it to sea on a rough day. Next slide, please. However, if you were insurers setting up insurance products for fishing vessels or for entire fishing fleets, how could you use the Wolfson notice? You may perhaps use it for a fair, evidence-based risk assessment, whereby the minimum operating freeboard of a vessel or a fleet of vessels drives the sea state-based threshold or attachment point. Take, for example, our 11-meter vessel and assume it's well built and light, so it can operate in the green zone of the notice at around 60 centimeters of freeboard for most of the fishing trip. Now, assume that its freeboard is reduced to 30 centimeters when the vessel picks up its fishing gear and performs a lift over the side. Now, this is most onerous operating condition for the vessel, and this is what you want to protect the fishermen against. At 30 centimeters of freeboard, the vessel moves from the green zone of the traffic light system to the amber zone, with a maximum recommended significant wave height of 1.4 meters, which means about 3 times per day, you may encounter a wave that's twice as high, almost 3 meters. So as an insurer, you would want to set your attachment point at 1.4 meter significant, because this is the maximum recommended sea state for safe fishing, given the minimum operating freeboard for the vessel. Now, to conclude my presentation, I have just one caveat. This approach should go hand in hand with vessel inspection and certification, because there must be a regulatory minimum for freeboard. Below that minimum, vessels should be deemed unsafe and refused certification or indeed registration. Vessels with a very low freeboard would always operate in the red zone of the traffic light system, So they would be continuously in danger of capsize, and they should not be indemnified if they are inherently unsafe. Next slide, please. Which is just to say thank you for your attention, and that's it from me. Thank you.
Thank you. Thank you, Dr. Matteo, for introducing us to such an interesting method. I'm sure it will be of interest to various stakeholders, and in future, it might be one of the parameters that may be considered widely across not only Europe, but other regions too. So thanks once again. So with this, I see we have people who may be wanting to ask questions. So I think we will open the forum for question and answer session. And then we have the last presentation as well as the closing remarks from Dr. Raymond. And he would also be sharing his perspectives on FAO's perspective for the comprehensive or complementary risk cover for the small scale fisheries. So I think the first, is that okay, Dr. Raymond? We can do it because I think a lot of people
Yes, I
have
think there
been
are a lot of
writing.
questions. So let's continue with some questions, and at the end I'll do 5
Yes.
minutes, and that's it. Okay.
Sure. Thanks. So we have a question here from Varun. So Varun, this question was directed to Adarsh, or it was just in general that you had put up this question?
It was for all the speakers, just to understand broadly whether these parametric policies have been profitable. For example, Krishnan talked about local insurers in the Pacific, and have they had good experience with these policies? So just trying to understand whether they are sustainable from an insurer standpoint as well.
Okay.
Yeah,
So I think here, sorry. So the way we will go about is let's take the view of the CCIRF. We have Gina and Elizabeth, and then we can go to the Mr. Krishnan, and then even the Howden Insurance. So Elizabeth and Gina, do you want to go first?
Well, actually, as you know, most of CRIF's products are sovereign, and so the idea of profitability, we are sustainable, we do have investments and so on, and the countries do renew their policies each year. For the 2 coast countries, we have had support from the World Bank for those countries, and we're moving into trying to expand throughout the region. And so the issue of countries being able to pay for their premiums, that's always, present but we'd like to think that the countries realize the importance of these products, and so they make space in their budget to purchase these. But we're not a typical private insurance company.
Thanks. Mr. Krishnan, over
Yeah,
to
thanks.
you.
So Varun, it's a very good question. So, so as I mentioned during my presentation, it's about 2.5 years old since the first products were rolled out. There have been claims paid. We have, I mean, as a UN agency, we have taken care of some of the initial product development and technical costs. The insurance companies are rolling it out on their own. So far, the numbers show that the claim ratio is about 80% in the first year, and about 60% in this current year. So which still means that they are left with some underwriting profits. It is not to say that it will become sustainable immediately. You need to build a good premium pool, a good risk pool. And I feel that even if you take the entire Pacific, minus of Papua New Guinea, the total population is only 2.25 million. So the addressable market size could be possibly half of that. So it is a challenge, but that's why I said we are going in for group aggregation using superannuation funds, development banks, etc. We hope that this will reduce the distribution cost and increase profitability. Thanks.
Thank you. Adarsh, would you like to share your thoughts?
Yeah, absolutely. And really echoing that sentiment about a diversified pool of risk. Well, unfortunately, I can't speak too particularly to Pacific or Caribbean insurance programs, but from the global market perspective, I think the most successful insurers in general have diversified their book out of the US, for example, where they hold a lot of accumulation in places like Florida and Texas. And they're actually very keen on writing business elsewhere to diversify that book out. And the general trend that we're seeing is more parametric markets coming up than going down. So I think it's a good sign that the loss ratios are working in the market's favor. And I think it comes back to the fact that with from a parametric underwriting perspective, rather than looking at the potentially subjective vulnerabilities that you have in traditional CAT models, you're only looking at the mathematical probability of the event happening. So I think when it comes to that, yes, there's still uncertainty, but in my opinion, there's less uncertainty than underwriting using traditional models.
Thank you. Dr. Sharma and Tanai's team, do you all want to share your thoughts on this? Because
Yeah, I think Adarsh perfectly
level.
captured it. Yeah, because it's parametric, so it's essentially underwritten based on historical weather data. Say the products that we have underwritten are based on IMD data sets, which are historically taken for 30 years, right? Because it's a completely mathematical model, so loss ratio and everything is predetermined at a statistical level. So, which is why it's more predictable as compared to other policies. And all the policies that we have given, I think loss ratio has been, maintained profitably in this.
Okay. Okay. So we have, thanks, Tanai. So we have another question from ICSF, Mr. Sebastian Matthew. So Mr. Sebastian Matthew has said that the speakers have given some idea about the differences between the traditional indemnity-based insurance and parametric insurance. Can the speakers clarify where there is a clear competitive advantage of parametric insurance over traditional insurance products? So this question is open to any of the speakers who would like to go ahead with this to answer.
Can I give an example, Suchitra?
Sure, Jean.
Hi. Not mentioned in this call, but CRIF does have a product for electric utilities companies to provide protection or coverage against their T&D, their transmission and distribution lines. So typically, electric companies can find indemnity insurance to cover their generation facilities, but it's difficult for them to do so for their T&D infrastructure. So this is where a parametric product like CRIF's, which covers the T&D lines, can complement the traditional indemnity insurance, which they can get in the regular market for their generation facilities. So I'd just like to provide that one example.
Great.
And I think following on, oh, sorry.
Yeah.
No worries, Adarsh, continue. I'll go next.
Okay, thank you. Sorry about that. Yeah, and really following on from that thought, take it from a broker who solely focuses on parametric insurance. I think there's a place for both. And a key example, I think, is in the traditional property world. The retention rates or deductibles are slowly increasing in many areas around the world. So what we actually see is parametric insurance used as a tool adjacent to traditional insurance. And as Gina highlighted, there's actually different use cases for these, right? So it could be that one area of your property is using traditional insurance, whereas the other is using parametric. And around the social assistance to deal with shocks, following on in that same thought, you might have a $200,000 asset, and you've got 180,000 of that covered traditionally. You can get 20,000 covered on a parametric basis, where if that event happens, yes, you'll be indemnified traditionally, a month or a year down the line. But with the parametric policy, it can pay out potentially quickly enough for you to get back on your feet.
Yeah.
Yes,
Also
Tanay.
adding on, so some clear, differentiation that we see between indemnity and parametric is if you look at the spectrum, the size of the risk covered, right? If you look at the lower end, when the size of the risk covered is very low, then we need to make the overall operations as efficient as possible. Now, going for a traditional indemnity-based product, say for a risk that the risk size itself is say $20 to $30, a traditional process might not be very cost effective because the operationalization cost itself would be supremely high, which is why a parametric product in that case makes a lot of sense because it's just anchored to a data set, which would then pay out once a specific trigger is hit. Then if we look at the other end of the spectrum, just like others spoke about, so there's an asset which has a very high risk to be covered. And a lot of times there is uncertainty in the amount of actual risk of the, say for example, in India, if we look at one use case that is emerging is some power plants which are based on renewable energy have a very high degree of uncertainty if you want to cover them against, say excess rainfall and earthquake and so on. But because this data is available, like earthquake data is available historically, rainfall is available historically, then parametric insurance can be leveraged in such cases where prior risk data is not available. So these are the two primary use cases where parametric insurance clearly offer an advantage as compared to indemnity-based insurance.
Thank you, Tanay. Okay. So we will move to the next question. Here the question is from Sinja Buri, and the question is for Adarsh from Howden. So Adarsh, she's asking with respect to the product that is looking at ensuring the whole supply chain in proportion to the estimated damages and losses of actors along the supply chain. How is this done exactly? And would there be different premiums and some insured for the different actors with separate policies?
Yeah, I mean, absolutely. And I think it's a very, very good question to maybe set the scene. Let's say we've got 10 small scale farmers operating their fisheries. If each of these farmers want to cover their hurricane risk, they might be attaching at category 3, right? Or at a specific wind speed. And for them, that's a slightly bigger spread of risk covered. Whereas for, let's say, a supermarket that's buying the fish, if they don't maybe need to insure the exposure across all 10 farmers, it might be that they need to insure the exposure for 5 out of the 10 farmers. So, excuse me, if 5 out of the 10 farmers start to experience potential losses, that's when the supermarket starts to experience losses. So in terms of the spread of risk covered, that's a potential lever we can pull. And when we look at the sums insured, this looks at the total kind of financial exposure across the supply chain, right? So for the farmers, you might be looking at the loss of stock and the loss of revenue as a result. For the supermarket or for a trader along the chain, they might have slightly different financial interests. So hopefully that gives you an idea of how the spread of risk covered alters, which inherently affects the rates online that you have. And also on the other side, the potential different limits that you might apply.
Thank you. So we have 2 more questions. So we'll take the first question from that. It is from Mr. John Kurian. He wants to know, can the parametric insurance can we use the parametric insurance to address the meteorological unemployment? That is where fishers are banned from going fishing when sea conditions are not good and so lose potential earnings. So it is related with the social protection.
Yeah, I'll take this one. So I think this is already being done in a lot of coastal regions where we see products protecting fishermen from, say, cyclone and named cyclone when they come in. So basically there are predefined triggers when fishermen are banned from going for fishing, right? So these kind of products are already being built. We also recently built a product where if there's a heat wave, very high amount of heat wave, then naturally fishermen won't go to the pond to fish, or won't go for agricultural activities. So for that also a loss of income cover has been built based on the heat index, right? So these kind of loss of employment products are getting quite the traction nowadays.
Any thoughts from the UNCDF, Mr. Narasimhan? In the Pacific side, has there been this kind of experiences from the meteorological unemployment?
Yeah, so I think there is a case. I mean, so these are definitely possible provided the triggers are well defined and understood by the people who are to be insured. It is definitely possible to provide business interruption or say income protection type of thing for a possible warning which will avoid them from going out. But then whether it results into a trigger event, we do not know. This is something like what we have put out as an anticipatory product. The anticipatory product expects that the tropical cyclone will make a landfall at this particular place. But if it deviates, then what happens? The payment would have still been made. So we have designed the product in such a way that even if it deviates, even if the payment has been made, it's in expectation that the community has used that money for preparing themselves better to face a disaster or to face an extreme event. So therefore, there's no refund and charge. Yeah, it can still be modeled. I think it is possible. Thanks.
Suchitra,
Yes,
if I
Tina.
could just say, that's exactly what the coast product does. It does include that adverse weather component, which is kind of like a business interruption, so when the rain or waves are too high for fisher folk to go out and the policy is triggered, then they would receive a payout. But importantly, it's not just the fisher folk who would receive the payout. It's all persons in the fisheries industry, including the fish vendors, etc., who would also be impacted if the fisher folk were not able to go out. They would also receive part of the payout.
Thank you. Also, Gina, I think there is, I'll just quickly go to the other question where Dr. Raymond has asked, will the cost premiums for the countries increase? And has there been any payouts in the year, specifically in the year 2022 and 2023 to the coast CCIRF initiative, considering that the El Nino is expected to affect the Caribbean region?
The premiums typically from year to year, they don't increase that much. It really depends on the reinsurance market and the terms and conditions of that. Since the coast product was launched in 2019, as I said, it's only for 2 countries, Grenada and St. Lucia. There haven't been any payouts since then to those particular countries, also because those 2 particular countries haven't been affected by severe tropical cyclones, etc. But we imagine as we roll the product out to more countries in the region that the probability of payouts would increase.
So we have one question from Debashish. Debashish is asking, as an academician, where can all the contents for parametric insurance products for disseminating among MBA students? So Debashish, this is our small attempt since it's a knowledge sharing and we have tried to bring various initiatives. So we will also be sharing these presentations. There's a lot of information over there. FAO has also published documents related region-wise. There's been a study of FAO in the year 2022. which talks about the fisheries and aquaculture status worldwide. So we can share those documents also. And we also call upon our participants if there are any initiatives that they would like to share with us, so we can disseminate it amongst the various participants. And of course, for the students also, since this is a evolving subject and we are all learning in that process. So with this, I will move to, let's take this as the last question. It's from Dr. Prakash Das. Dr. Prakash Das is from Nabat, and he is very keen to know which is the insurance company that is offering the parametric insurance in the northeastern state of Assam for the FFPO.
Right. So we are working with multiple insurance companies in Assam because different insurance companies price the risk differently. And some companies that we have worked with so far are SBI General, then Agriculture Insurance Company of India, then ICICI Lombard, HDFC, and SBI as well. Oh, sorry. Yeah, and Future Generali as well.
Okay. So are you saying that 4 companies are offering this product jointly?
No, so
Or-
for, say, we want to introduce a low temperature product, right? So we define the triggers and build a product structure and share with multiple companies. Then they all share because they have their own underwriting method again. So they share a product from there. So we use all of these and basically see what is the most relevant one for this. So like, but there are multiple products available at any point of time. Say some fisherman says that we want a product from SBI because we trust SBI more. Then we can also offer them a product from SBI, for example. Yeah.
But the you had mentioned about the premium amount, which is very low, and it's very interesting to see that you
That's
said that
right.
just for 40 INR or $0.5. So the amount, premium amount remains the same, whichever company that the client wants to go ahead with.
Yeah, roughly the premium amount remains the same. It's say we propose a premium of say 40 INR for the same sum insured. It will hover between 40, 50 or even 35, right? But it will remain very close to the proposed premium amount.
Thank you. So I'm sorry, but I think there's one more question, and it is from Dr. Ravi Shankar. I know there are going to be a lot many questions, but we also have a time limit. But let's take this. I'm sorry, Dr. Raymond, but let's take this. Dr. Ravi Shankar is the director of CIBA, a Central Institute of Brackish-Water Aquaculture. So he says that in India, we have 2 indemnity-based shrimp crop insurance products with scientific data support of ICAR, CIBA, now in open market for about 650 acres are covered till now. Okay, sorry. So this is not a question, but he's sharing the information with us. Thank you, Dr. Ravi Shankar, for sharing this interesting information. I'm sure our insurance stakeholders would be super interested. And I would also like to just share with you all, yeah. So starting next week, Central Institute of Brackish-Water Aquaculture is also holding a shrimp insurance training for the insurers, NGOs, stakeholders. So this would certainly be of interest to the various stakeholders to understand. So with this, I think let's move to the next last presentation and also the final wrap up from Dr. Raymond. I would like to invite Dr. Raymond. Okay.
So,
Let me give
yeah.
you a little bit of introduction, Dr. Raymond.
Okay,
So Dr. For all those who have just joined us today, so Dr. Raymond is the Senior Fishery Officer and the team leader for the Fishing Technology and Operations team and the Fisheries and Aquaculture Division. Dr. Raymond has been with the FAO since 2000 and has been posted in several countries. He currently leads, as I said, the Fishing Technology and Operations team. His main areas of interest are in fisheries development and investment, techno-economic assessments of fishing fleet performance, safety in fisheries, emergency assistance, and fisheries microfinance, credit, and insurance services. And for all those who may not be aware, Dr. Raymond has also has been the lead in publishing several FAO-related documents on fisheries finance and insurance, including the recently published study of FAO review of insurance and aquaculture, which is a world review. And FAO comes up with these documents every decade. So, Dr. Raymond, over to you to share your perspective on the comprehensive and complementary risk cover for small-scale fisheries.
Thank you very much, Sushita. And thank you all for staying over time in this this very interesting webinar. I'm impressed with the presentations I heard so far. It was really really nice, an eye opener also for me and for my colleagues in FAO. So thank you all for that. I will try to be brief in my short presentation on comprehensive or complementary risk cover for small-scale fisheries. Let us first recall that small-scale fishers really need insurance because fisheries is a very dangerous occupation. More than 100,000 fatalities we estimate in fisheries every year. Fishers work in small open boats often, long hours, harsh weather conditions, high waves, really challenging working conditions. There is hardly any shelter. Boats can capsize, they can collide, they can sink, engines can fail, there can be fire on board, there is piracy in some regions, and then of course the climate change effects are creating more storms, hurricanes, and floods, which is affecting their businesses and their lives. Consequences are that there is damage and loss of fishing vessels and assets, other assets, as you know. Financial compensation to affected third parties is needed, injury, loss of life and disability, but also loss of employment and income. We have discussed this today quite a bit, and I'm very happy to see also that the CRIF has started an effort in this income compensation work. If we then look at the what is the difference between parametric and traditional insurance, we really see a lot of benefits in parametric insurance, and FAO is really convinced, like many of you, that this parametric insurance may be a very good option for the small-scale fisheries sector. First of all, because coverage is triggered after a predefined event, parameters are met, so it's a very simple system. It is transparent. Parametric insurance is very transparent because external independent data are used for the trigger points. Payouts are much more flexible than in traditional indemnity-based insurance. We see that no value assessment and damage assessments are needed, which reduce tremendously the transaction costs, which is a main point for reaching small-scale fishers. No more moral hazard is avoided, but still there are within parametric insurance, there are lots of benefits for people who are really implementing resilience measures. The faster payout related to a faster income recovery goes to communities, of course, and so on. So there's a lot of benefits from parametric insurance. On the other side, we also know that parametric insurance cannot cover everything what is covered by traditional insurance. We see, for instance, crew accidents on board during the ordinary season, with causing disabilities and injuries are not covered. We see that collisions of vessels capsizing, theft and vandalism, damage to third parties, loss of employment and income during the fishing season, but not when not reaching a trigger point or an indicator of wind speed or wave height, then these are not covered. And these are also essential insurance services that are needed by small-scale fishers. So we see that definitely there is the parametric insurance coverage for damage and losses from natural disasters, weather events, climate change triggered events. And then we see the traditional insurance cover also for health insurance, accidents insurance, asset insurance, third party, and also some damage from natural disasters. Together, these two insurance products or services provide, as we see, a very comprehensive insurance cover. So we can conclude, I think, and we all agree that the two insurance types are complementary. They are both essential risk transfer mechanisms for fishers. and they are increasing together the resilience of the fishing industry as a whole. So I think both are essential for our work in the coming years in terms of increasing the coverage of insurance in the fishery sector. FEO continues to work with the CAFI-SSF network in the webinars, the studies, various projects worldwide that we have. We will also work on the development of guidelines for value assessment of small-scale fishing vessels with checklists to facilitate access to insurance. We will develop on other guidelines for seaworthiness and safety inspection of small-scale vessels, because safety certificates are often not given, and we want to make this simpler for fisheries authorities. So also to facilitate access of insurance. We continue the development of various blue innovation brochures, which will also cover fisheries insurance and probably also parametric insurance services. We may be in touch with you in the coming months about this. We're working on technical assistance, on establishment of insurance programs for FAO member countries upon request. And we recently started a collaboration with the European Space Agency, which is developing Earth observation tools to support parametric insurance for fisheries and aquaculture. What is interesting for CRIF maybe is also that we are working on a GCF project as the Green Climate Fund formulation for St. Lucia. And it is foreseen there to also support insurance access for fisheries. So I assume that the colleagues in St. Lucia, which you are already knowing, of course, will be in touch also with you and us to discuss collaboration under this GCF project in the coming years. I think that's all from my side. I would only would like to thank, of course, before we close, first of all, Suchitra for organizing this very nice webinar, bringing you all together. This is great. Also, I appreciate very much that UNCDF has teamed up this time with us on this subject. And I look forward to further collaboration with UNCDF colleagues. I would like to thank from the CRIF, Elizabeth and Gina for their excellent presentation. From the KIPAC, Mr. Krishnan. From APART, Mr. Sanjay and Tanyai, which had a beautiful presentation as well. From Howden, Adash, and Wolfsam Unit, Matteo. Thank you all both. Thank you both very much for great presentations. And I, of course, would like to thank all of you for participating in this great webinar. And I hope to see many of you in the coming years or the coming webinars this year. We have 2 or 3 we have for the rest of the year. So I hope you all will join to these webinars as well. So thank you all on behalf of FAO, and yeah, great that you participated. Have a nice day.
Thank you.
Thank you.
Thank you.
Thank you. Bye, everyone.
Bye.
Thank you.
Bye.
Bye.